What's up, guys? On today's episode, I had a chance to chat with Tolks and Josh Litchman. Josh is the director of ecosystem at Pixels and was previously at Framework, and Tolks is co-founder at Page One. We mainly chatted about how alts have been performing and the maturation of crypto, specifically with the rise of defensive tokens. We also discussed if Frontends can act as a moat, the World Liberty Finance partnerships, and lastly, we even took a stab at talking about GameFi, mainly focusing on how we can shape user behavior for financial feedback loops. This episode was a fun one. Please enjoy our conversation. Nothing said on 0x Research is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and any views expressed by anyone on the show are solely our opinions, not financial advice. Boccaccio, Ryan, and our guests may hold positions in the companies, funds, or projects discussed.
Hey guys, DAS, the Digital Asset Summit, is coming back this year. It'll be in New York City next month. There'll be a ton of great speakers and guests there. Some of our friends on the research team, I know Mark Arjun, Ryan Cashflows Connor, they'll be there in the flesh. So you can have a chance to meet and chat with them and some key folks from around the industry and hear what they're thinking about crypto. For all our listeners out there, use code 0x10 at the link in the description. You can get 10% off tickets, and we really hope to see you there.
What's up, guys? Welcome back to another episode of 0x Research. Today I'm joined by Tolks and Josh Litchman, who is the director of ecosystem at Pixels and is also working on some behavioral economic experiments, which I want to hear a bit about. But Josh, maybe you want to give a short introduction of yourself as well as what you've been working on, if it's not too stealthy.
Yeah. What's up? Very happy to be here. Yeah, so I guess a little about me is just like worked in venture for a bit. Before that, I worked in finance, both fintech and just like banking. Most interesting part about crypto is just like it's human behavior at scale. So you're adding money to behavior basically. And yeah, I think like there's definitely some cool stuff we've seen in the last few years, but the thing I'm the most bullish on right now is basically gaming being the conduit for human behavior for the next, who knows how long. But definitely kind of serves as like the kind of opening for a lot more people to get involved in crypto.
All right, fantastic. We're going to talk a bit about that. I think gaming, we talked about Snippet as well, gaming podcasts, gaming, talking about crypto gaming is kind of not very present right now. We're going to get a bit into that. I think before that, we were talking a bit about alts, all of us, but maybe it's good to let the listeners know a little bit. So we had a few announcements today. I don't want to talk about general broad market thoughts. I think that's kind of, market's a bit dead at this point. But a few things is World Liberty Finance and SUI had an announcement together. This is Thursday, March 6th. So by the time this goes live, it'll already be out for a few days. So we might be wrong whenever that, like on the Monday. But immediate thoughts is that it's kind of becoming a news traders market or regime where like you really need to be locked in and trade those like headlines. And apart from that, there's not really that much interesting going on. What do you guys think?
Yeah, no, I mean the World Liberty. I tweeted this morning just kind of more about the growing number of coins that are attached to admin. I think we'll see the market kind of get exhausted of that a little bit. I mean, you had the initial World Liberty partnerships with Tron, Move, obviously,
Moves
and
a big one
then
here.
Sui. Yeah, and then I mean, those were you could make the case that they were pretty impactful, that they were backed by the admin. And to me, like with Sui and obviously with the strategic reserve announcement, potentially including, I mean, we'll see tomorrow, potentially including ADA and Sol and ETH. Like as the list grows longer, it just, in my mind, becomes a little less impactful and more diluted to what assets are tied to the admin. I think with alts, like you could have reasonably made the case that there were some that were going to significantly outperform the ones mentioned that, before the list started continuously growing, and with the way that World Liberty is structured, kind of that pay to play a little bit, like I would be shocked if it didn't continue to grow. And I think you could make a pretty strong argument, a little bit before the strategic reserve included ADA and Sol and XRP, that there were some coins that were attached to the admin. And like I said, just kind of as that list grows, it becomes a little less impactful. And I think that's something that the market is waking up to a little bit this morning and will continue to wake up to as we move forward. So I think you could have made a pretty strong bullish case for some very specific alts, and I think it's just waning a little bit now. And the market in general has been, I mean, the volatility is just off the charts. And I mean, we don't need to talk about broad alt sentiment, like everybody knows where it is. But I think the market got a little excited that, again, you could attach very specific alts to the admin and have like an underlying, maybe bid or floor. And I think that is just deteriorating a little bit. So it's an interesting spot.
Yeah, from like a headline perspective, I would agree with that. And then also like, I think the simplified view too is just like any token that Trump kind of announces some affiliation with, right? Like they basically get tied into an overall kind of Trump narrative. And so it affects kind of what PA is going to look like going forward. And my sense is now like you're basically injecting kind of an unknown degree of volatility into these tokens. So I would not categorize an announcement like this as like overwhelmingly bullish. I also wouldn't say it's overwhelmingly bearish either. It's just like there's going to be more vol. And like if you're trading these things, you should now expect there to be some kind of movement baked into announcements or kind of like Trump making decisions or saying things, right? That is like now totally removed from your control. So like if you're a vol trader or if you're a maker in these markets, like probably a good thing for you.
Yeah, you're feasting.
Right. If you are like a directional trader or like a picker, like I would say this just makes your life harder, to be honest.
Yeah, I agreed on that. I was a bit surprised that Sui chose to do this, to be honest with you guys. Movement, Tron, I feel like those are a little bit expected with like deals with World Liberty Finance, especially now that we know it's like pay to play. Sui was a bit interesting. I wasn't expecting that, but I guess kind of talking a bit about those pickers and like making directional bets. I saw this tweet from Howdy Mary. Josh, I think he interacted with it. That's why like I saw it. She was talking about, I guess, defensive tokens versus, I don't want to say offensive tokens, but like growth tokens. And we've had a bit of this narrative pop off now with Hyperliquid. I think is the big one because they have the assistance fund buy. Radium, they have the buyback. I'm curious, like, what you guys' thoughts are on that. We had this with GMX as well. I don't know if you guys remember, but it did super well in like 2022 just because it didn't have a buyback. I can't remember now. It just had revenue, so it was like, wow, this is real yield. We need to get in on this. Do you guys think that's going to be the case going forward? Are we just becoming more and more mature where there's like these things matter a lot more, or do you think it's still going to be like a growth?
I think it depends like kind of who you ask, right? Like obviously there are like people in this space who are incentivized to want a lot more fundamentals, and then there are people also on the other side of the equation who are like, hey, like the more that these tokens trade on narrative and on kind of just like memification, like the better. I would argue that like both is good and there's a time for each, but typically we do see protocols kind of like fall back. I wouldn't even say it's just protocols, just like apps, protocols, anything. It kind of they all fall back to what the fundamental like value driver is for token price. So I do think buybacks and rev share are super like crucial, honestly. And if they're not at least part of the roadmap for a project, I think it's tough to like justify owning them when there's like, volatility, when prices are moving down. Like you kind of just move to a safer basket of assets or ones that like, hey, there's like programmatic buying that's happening. I don't have to worry about that. When it comes to like this list, like I think this is a little bit of a soft shill, and that's fine. But also, like, this list is going to get longer, right? So I think the real alpha here is not in like, hey, cool, like these four are the names to own. I think it's like, what tokens reliably do you think are going to implement something similar, where that kind of like net change on a relative basis is like much more important than it is for maybe something like let's just like use like Jupiter or Radium even as an example, right? Like they already do so much volume. Adding a little bit there may or may not make a difference, but there are like a ton of protocols right now that have been afraid for like the last like 4, 5, 6 years to like touch this realm of crypto. And when they do, I think that really makes some of these, call it mid to long tail alts, very interesting.
Yeah. No, I'd definitely agree with all that, and I mean it's an exciting time just to see have that regulatory clarity and kind of that cloud removed from over their head, being able to do this. But yeah, I mean the value to growth and offensive defensive, like I mean it's pretty similar in traditional markets too. Like there are value stocks that do okay, like we've seen the past week, when the indexes are selling off and growth kind of gets hammered. Like it's kind of the similar strategy there, and it goes to what we were talking about with Mike earlier this week, Bach, just about the dispersion that we see in crypto markets. Like to me, that is kind of the core like tenant moving forward is just dispersion is going to be greater, and these buybacks, the mechanisms that tokens can use, like that'll play a much larger part moving forward. And the alt seasons have passed, like we talked about kind of ad nauseum at this point. Like there's going to be just ever increasing dispersion. It's
Yeah.
the same thing in TradFi markets again. Like it just goes to the growth and the maturity of the asset class at large to me. And there's stuff that purely trades on narratives and relative valuations, and I think that edge that was in the market for a long time is kind of deteriorating, and you're moving more towards the fundamental valuations. And like this, everybody wants the shift to fundamentals, and I do too. It does kind of remind me a little bit of like macro at large. When people get like macro bearish and then stocks go up for a week, but maybe they're down say 10% over a couple months. Like it reminds me of macro in the sense that like it is turning a gigantic ship. Like it takes time for
Yeah.
the overall, like everybody wants it to all of a sudden be like, oh, meme coins are dead now. Like it's the pure shift to fundamentals. Like the one thing I will harp on is that this stuff does take time to
Yeah.
like I said, like turn that giant ship in the middle of the ocean. Like it's not something that you just flip a switch and all of a sudden, everything's changed. So it does present a lot of opportunity, but I would just say that like you're still a little bit beholden to BTC. Like, if BTC goes down 10%, like you have a higher floor, of course. And again, this is a good thing, but it'll take some time. Again, it's
Yeah.
a welcome thing to see, but it takes time.
Also, anyone that like says, there's a return to fundamentals, like meme coins are dead, like I think it's like a deaf take, right? Because as soon as there's a overwhelmingly bullish catalyst that becomes consensus, like memes there'll be different memes, or like there'll be strength in maybe a different area than there was before. But like memetics drive markets, right? Even in traditional markets, it's just like maybe a little bit more obscure. So I think, I mean, this happens like every single time we get like a change in market regime. People get like overwhelmingly, they feel overwhelmingly that like a certain type of behavior does not come back, but like behavior is very repetitive, especially with
Yeah.
humans. Right? So like we know this about markets, so it's hard to just write off like, hey, like memes won't drive price after this. The market's getting mature. It's like the market can get mature and still like there can still be narratives that emerge and find ways to express themselves. It might just look different, and I think that's going to happen in perpetuity. But yeah, generally agree as well.
Yeah, the casino's not closing anytime soon. Even if like the fundamental tokens, like you can value them better, like they have higher floors. There's buybacks, there's token mechanics that we've all been wanting for 4, 5, 6 years now. Like those things can happen in parallel. But yeah, the casino, like it's not going to close.
As long as people have opinions, there will always be that kind of phenomena in markets, I think. Right. So
Yeah. Talking about memes a bit, first of all, we talked about this in like our analyst chat as well. I think one meme is all it takes for us to like go back to going crazy about memes. Second thing is like we're harping about fundamentals now, and I know people are harping about it on Twitter as well. But like even if some memes are dead on Solana, like on Avalanche right now, there's a bunch of pre-sales happening for meme coins and for other things, and they're like doing really really well. So I think yes, we'll see a shift, but Tolks, like you said, it's going to take a long time, and in between, there's definitely like ways to play non-fundamentals as well. One more thing with fundamentals that I think about is I think we've historically been a VC driven market. I think if fundamentals or if we get like more maturity, I feel like more liquid funds will come in, and I feel like we're already seeing that this year. Yeah, I can only think of one right now, but there's these guys called Faya Research. I don't know if you guys have seen them. It's like Felipe and Noah, who's really good as well. And I feel like they've kind of popularized more and more like sharing liquid fund thoughts. Because historically,
Mhm.
like if you go on Twitter, it's Kyle Samani and Osip who are great, but they're like writing diatribes about their thoughts. I like that we're getting more and more thoughts from liquid guys. Syncrasy is another one.
Yeah, I was going to mention them. Arthur too from Defiance. They do,
Yeah,
from time to they have the Ave thesis. Yeah.
yeah. So I feel like we're getting more and more of that, and I think going forward, hopefully, we'll get more and more liquid funds because they are really, really important. Like especially if you have too many VCs, the market dynamics just don't work as well. If there isn't like constant retail flow, so it'll be good to get a kind of a shift in that. Next up, I actually wanted to tie this into Radium because we kind of mentioned these defensive things. And Josh, this is another one of your tweets. Front ends as a moat. I'm going to say before we get into this, I hate Radium's front end. I think it's horrible. Like, and it's always been like I was bearish Radium, which was wrong, but I just didn't touch it because I was like, this is like dog shit. I don't care. Like, I get it. Everyone else is using it in the back end. I'm not touching it. Wrong decision. A lot of people made a lot of money on it, but for me, it was like a no go. But now we're seeing kind of a shift. Like, do you guys think that front ends can be a moat, or do you think it doesn't matter that much?
I have some thoughts on this. I mean, so Radium specifically is like just a super interesting case study because obviously this is DeFi, and a large part of I kind of underwrote Radium personally last summer, and it was funny because I think there were also a number of funds that underwrote it over the kind of same time frame. Um, and I was overwhelmingly bullish because Radium was like basically buying back and burning a very small but modest percentage of basically fees, um, and they were doing a ton of fees through Pump Fund. And the biggest criticism that I heard was like, well, what if Pump Fund just decides to like do this, right? And they did. And I don't, I think it's interesting. Like now, I think it's different, right? Like than what we had last summer. Last summer, I was like overwhelmingly bullish that Radium would kind of get to parity with Uniswap in some way. There was just like so many tokens, people wanted to swap, they needed to trade in and out. I still think that like there is probably like a power law distribution of where volume is happening on these dexes, but it's hard to say who and what, because if there's a new app in like 6 months that just like totally undermines Pump Fund and steals like a bunch of mind share, it's entirely possible that their AMM would then drive the most fees in the market. So I think it's kind of, at least right now, it feels still up for grabs. When it comes to front ends in general, yeah, I did tweet something about this. I'm pulling up the tweet that you sent me. Let's see. Yeah, so like Rajiv, who is one of my old coworkers at Framework Ventures, he tweeted this thing that tweeted DeFi and more specifically trading is the lifeblood of on-chain activity, which is like I think like a fair statement to make, right? Like especially crypto to date, it's like a lot of people who would probably self-identify in some respect as traders. You wouldn't really be here unless you were, at least interested in trading these tokens. Um, but I think like more broadly, I would almost amend the statement to say like front ends are the most important thing. It's the most important kind of like concept is like opinionated front ends in crypto. And like trading is an example of that, right? But like overall, front ends are just a way to like engage a certain user's behavior in a way that is like addicting or like particularly like satisfying, and rewarding them to do kind of what you want them to do. And so yeah, I think like when we think about, hey, like what does the internet look like in like 10 years, the front ends are probably the piece of that most people will care about, and this is something that we've been talking about like too much. But yeah, I do think like at least the most interesting aspect of crypto, at least to me right now, and like the area that is kind of the most ripe for kind of experimentation and kind of breaking things is like, can you create a really interesting opinionated front end that tweaks aspects of maybe what exists or is just like entirely novel, and can you like create a new kind of behavior feedback mechanism, because those loops are always like open to change, right? So yeah, that's kind of I completely agree with Rajiv. I think like I see exactly what he's saying. He shows a list of basically like Pump Fund, Photon, Maker, Uniswap. Like these are like they're all trading venues, right? What does that look like in like the next few years, right? Are there other applications that are able to drive fees based off of other types of behaviors, not just trading? I think that's kind of like the open question.
Yeah, I mean, I think just to the front end's controlling too. Like, I mean, you see it. I mean, Phantom just raised at a $3 billion valuation. You know, like, I mean, that is worth something there too. And obviously, you know, MetaMask and Consensus and what they're worth. And you see it with Backpack on Solana, like trying to build out. I haven't looked into their metrics recently, but like, you know, they're trying to build out like a full exchange in the wallet. Like, you know, the thesis that wallets as like the front end of not even just, you know, trading, but more like a full, you know, DeFi financial suite at large. Like that's been a thesis for a while, and I still think it's directionally accurate. It's just, you know, another one of those things that takes time. But yeah, of course, I mean, like the wallets that are necessary to interact with crypto, like those are insanely valuable because they have user capture, and there's only so many options. So yeah, I mean, I still deeply believe in that thesis. And obviously, you know, the trading terminals and the bots and Pump Fun and the most used front ends like that too. I mean, you see what they can kind of command there too. It even goes to like, you know, Uniswap with introducing their fees. Like, you know, they have such user capture that like you can implement, you know, some fees on some swaps from ETH to USDC and other stables. It just gives you that, again, like that command of the user. And I don't really think
Yep.
that that's necessarily going anywhere.
One interesting thing that we have measured in the industry, like in certain spurts, has been order flow, right? Like order flow is king. I think it really helps to just think about order flow as like the most valuable thing in crypto. Like Tolks is, I completely agree, right? Like that's why the wallets are interesting, because like that's where the order flow originates. But the other
Mhm.
piece of order flow that's not usually talked about at the same time, but I think is like equally important, is like spend. That's why the trading venues are at least have been so successful, because they've been able to like reward this behavior of spend and make spending interesting with leverage. And so to a certain extent, the best measure is like order flow with some adjustment to ROAS, like return on, like kind of call it like the spend to acquire a customer, right? Like this is like the Web2 like advertising metric, right? Like return on ad spend. Like you would use something similar to ROAS to measure um, basically how successful your app is at driving order flow. Like there might be some adjustments you make on the back end of that equation to like adjust for like stickiness or retention or like how often people are spending, things like that. But like overall, the metric is very similar, right? It's like how much did you spend to get someone kind of like spending in the first place, and then how much are they spending? What's the value of them to your application?
Yeah. No, definitely. And I mean, you make the Web 2 comparison there, and like it's so powerful in crypto because of like it's an entire financial world, you know? Like, I mean, you know, Google and Amazon, like these companies spend ridiculous amounts of money trying to get you to click through once to spend $20. Like, if you capture a user in crypto, like it really the scale at like the amount that
Yeah.
is passed through you, like you said, through order flow, like it's incredibly hard to measure that. And it's orders of magnitude larger than in the traditional world.
Yeah, and that's I think also why like the value of the marginal like meme coin trading venue, right? Like the value of that is just lower today than it was, last year, right? Because today you're going to spend a lot more in token incentives, rewards, advertising, whatever, right? You're going to spend a lot more to acquire a user that probably spends less. So your ROAS might not even hurdle, that 1x that you would need to be even profitable.
Yeah.
And really, most of these trading venues, like whether it be meme coins or even something like Hyperliquid, they're all going for ROASs of like, on the order of like 5 to 10, right? Like we're talking like massive ROI. So, you know, it's not, at least in my opinion, like unless you've tried some new mechanism that has a chance of like increasing ROAS by some non-trivial amount, it probably doesn't make sense to just like open up a meme coin trading platform right now, because like it's just not going to drive the type of ROI you would need to see from spenders.
That makes sense. I'm gonna touch on two things. Wallets. I'm very surprised that we haven't gotten like a very, very good wallet yet. Phantom and Rabby are quite good, but it makes no sense that I can't just do everything through one platform. Um, the second thing is, as far as I understand, and I think this is like general consensus, you want to be as close to the user as possible. But what I found is that, for example, Jupiter clearly launched like Meteora, or they're using that relationship to kind of capture shares from Radium and Orca, etc. Um, I think we'll probably go and see more and more of this, of like the front ends just moving into the back end. And I also am not sure if it makes any sense if you're a back end to not like hire a fantastic front end guy and try and figure that out. I like Dan Smith always talks about this, and Curve's entire idea was to just be the back end of stable swaps. And they only wanted to do that. And they didn't want to have a fancy front end because they were like, we don't really need this. It didn't work out for them. And I don't think it's going to work out for anybody to just like build out a back end product. And this was why I hated Radium. And I was wrong about it, but I'm still going to say it. Also, just for the listeners, we did at Blockworks Research write about Radium a long time ago. There are smarter people than me who noticed that. But for me, like just saying now, Radium actually might lose a lot just because they don't like. I've never gotten the, like you said, Josh. People work based on loops and not based on feedback loops. I've never had a good feedback loop with Radium. I'm never going on that front end again unless they fix it. Even then, I don't know. Like I'm used to Jupiter, and if a wallet implemented it, I would just use a wallet. To be fair, I mostly still use Telegram bots. I can't change. Even though I know I'm getting shafted on fees, it's just much easier.
Yeah.
Um,
Oh yeah.
Yep.
Yeah. That's ingrained. I mean, trading on Sol is just essentially through Photon for me, and like I
yeah,
don't particularly care about that. Like it's the convenience.
yeah.
But yeah, no, the curve front end is funny. I remember the first time I opened that site, I was just like, I just clicked a bad link. Like I'm getting drained right now. Like there's no way that this site is legit. It's funny.
Um, Folks, actually, I want to ask you a question because I think you got into the soul trenches earlier than me, Josh. I'm not sure if you did, but you should also give your opinion if you did. Um, Tolks, what was that shift like when you went away from like using front ends to just using bots and then to just using Photon? Because I feel like Photon is a completely different application to like Trojan and stuff, right?
Yeah, it is. I mean, um, going back to controlling the user in the front end, like we talked about fees and all these platforms, like it's not even, everybody's aware of it in crypto now. You can think of it, I don't know, some people frame it as extraction. I'm more on the side that, like, I don't know, it's a cost to play the game, more
Yeah.
so in my mind than extraction. It just kind of is what it is, and you get a, I want to do something quick, and I'll pay whatever priority fees necessary, because in my mind that risk reward equation is there. So like I don't even think of necessarily what people would call extraction, and I know there's a lot of debates on that, and I don't know, it's a sticky conversation. But I mean the shift there, like it, it's just more so. I'm trying. I don't, the front ends. I guess yeah, using Radio and Jupiter. But I mean, when I was first using those, like there wasn't anything really to trade. Like there was nothing to do. I mean, I was buying some bonk like periodically, and that was essentially it. So it was more so like the market filling a need than anything else. And then once it's there, it's just kind of like I'm never returning. Like, I mean, the last time I get a Jupyter front end from time to time, but I mean, the last time I was on Radium front end was probably, I don't know, it's been 6 months at least. And obviously, before the pump announcement, you didn't necessarily need to go there. Like, they were doing fine. Um, but yeah, it just goes back to the previous conversation we had about, once you capture the user, like, yeah, Photon has absolutely captured me. Like, I generally use it for Ethan based stuff too. And that's just, I mean, that's a little more quiet and infrequent, but it's just kind of the cost of doing business.
Yeah, I have a very different story about the soul trenches. Like I do not use the Telegram bot. I mean, I've tried them. Maybe I'm just like a crypto boomer. I don't know. Like I like connecting my wallet to the protocol itself. Like I would say like the most abstracted that I have, the most abstracted like app that I've used to trade has been or consistently has been like something like Jupiter. To me, it feels close enough to the metal, but also like the experience is just like a little bit. It's much better than Radium.
Yeah. Let's
And there's
let's
sorry,
agree on that. Radium's
yeah,
dog shit.
I agree. Yeah. So I mean, I started messing around with Jupiter like 2023, and I liked it, and so I kind of just stayed using it. And when the Telegram stuff came out, I mean, listen, like I just said this, so it'd be really stupid of me to just like kind of go against kind of what I just said. But to be logically consistent, I think it's good that there are new front ends being developed, one of which is Telegram. I think it's really good. Like overall, this is the type of experimentation that one would want to see. For me, and I think overall it kind of just comes down to preference, right? Like some users prefer an interface that feels more like a text message where they can just like fire things off and be done with it. And they're less fee sensitive. Other people want to feel like they're actually like making a financial transaction and trading, in which case, and those are people like me, in which case
Yeah.
I'm going to be like usually at my desk, right? Like usually I'm gonna like have screens open, I might have a chart open, whatever. To me, that feels like more comfortable. But like also these are all priors, right? So like at some point there'll be a new application that arrives and we'll see what happens, right?
Yeah.
It might take 80% of the market. It might take 2% of the market. Who knows? But it's always cool to see these things happen because I know people kind of everyone likes to do things differently. And it's very interesting to me that um, there is basically a subset of trenches now that basically just trades from their phone. That to me is interesting and it should be noted. But I still don't think, and Tolks, I don't know how you feel about this, but like I still don't think we're even close to figuring out like the best way to interact with crypto writ large. Like I don't think we've even scratched the surface there.
Yeah. No, I mean, I generally agree with that. And honestly, like this conversation here just reminded me of like when I do TradFi stuff and I open Charles Schwab and then I open Robinhood and I'm like, why in the fuck do I ever have an account? It is just horrendous using Charles Schwab compared to Robinhood, and that's what it reminds me of. Like, yeah, Robinhood is mostly it's easy on your phone, like it's mobile first, and I think we'll see that start. It has been growing in crypto, and I think it'll
Yep.
only continue up from here because that's just kind of what it has to do to keep moving forward. But yeah, it just reminds me of that a lot. Like, there's always parallels to Web 2, and I think we're kind of at that space right now. Like, the infra is getting good enough to, support mobile applications. And I mean, that's kind of the future of everything. So yeah, I think we're definitely headed in that direction.
I've been Danny, who's the other host, he wrote about these and told me about them. But Vector.fun is really good. I don't know if you guys have tried it out. It's like the Tensor app.
Mm-hmm.
I think that's the first like mobile crypto app that I used that I was like first that I was like actually pleasantly surprised with. Typically, it's always like a little wonky, or it's very very basic. I don't know if you guys remember doing the Magic Eden stuff. I don't know if you guys got the airdrop and had to interact with that like mobile app. It was horrible. After
I
that,
didn't even
any,
I didn't even claim mine. I opened it up and I was like, this is just a nightmare. I was like, I'm good.
so bad. Vector.fun is pretty good. I will say like they've built out. It's interesting. I do think that they've kind of leaned too much into this like trenches thing where I don't know if you guys know it, but it's like TikTok-y. I think it's interesting, but like sometimes I get a bit cringed out about the amount of like on-chain trenches talk that we have. I think like it's not what it
Yeah.
used to be. It's been co-opted quite heavily. So
The trenches used to be like, it wasn't a thing. It was like you didn't talk about it. You were just like, yeah, like I'm just trying to find things that are like small that could get really big.
yeah,
Now it's like, yeah, dude, I'm in the trenches. Like I'm tweeting. Who's I'm like, oh, Ansem just posted something. Like, it's like they're like these trench warriors now. It's like I don't know if it's. I think it's just it's changed a little bit. I'm not gonna like I'm not here to say like, oh, it's worse. Like I remember when I was young. Like I'm not here to do that. I do think like uh the trenches can be fun, but like I think there are tools like you're saying that like are basically like branded as like these are trench tools.
yeah,
And in reality, like kind of like anything else, like if you're using a trench tool, you're probably not going to find the thing that will like that like real people who are actually in the trenches are like using to find the gems, right? So like, you know, this is why I think like a lot of these things are they're social apps that are using kind of meme coin trading as like kind of the fulcrum. And maybe it works. Like Pump Fun, like clearly worked, right? But I think the things that are the apps that have like gone more social but are still basically Pump Fun, that's tough because um, you know it is almost too financialized to be social. Like you almost need to like remove some of the financial element to have like longevity. Um, but yeah, I do think like some of the trench branding is like when at least when I see it, I'm like, this is a little bit cringe because like
yeah,
no one who I know is like using this thing,
yeah.
so it's just like a little bit of cognitive dissonance.
Yeah. It just, in a way, reminds me of like the overall conversation on just kind of alts and fundamentals in the sense that it's just efficiencies, inefficiencies are slowly being stripped out. And that's, like the trenches are the trenches because you have all this tooling now. And same thing with like people complaining about alts. Like, look, there's a growing dispersion and the market is more efficient now. Like, it's just kind of what happens to markets that mature. And all of this kind of ties together to me in the same sense that it's just like, this asset class is maturing in real time, and a lot of the early efficiencies are being stripped out. Whether it's in altcoins, whether it's in fundamentals that underlie tokens, whether it's in the infrastructure and tools that you use to trade coins, like all of the early efficiencies are mostly gone now, and we're kind of waiting
Yeah.
for that next phase.
I mean, there were a few months there where it was like, I think people sometimes get upset when you mentioned that like meme coins might not do the same as they have. Um, but I think it's pretty clear. Like it's become gentrified. First of all, on the one hand, like with the trenches stuff, everybody's in the trenches somehow. Like you're not in the trenches if you're going to ETH Denver to do stuff. That's not it, you know. And then on the other hand, it's just been dominated by very very sophisticated actors to the point that it's too difficult. Even like Tolks, Josh, me, I would say like we're at a level where you're supposed to have some edge, but like that edge has steadily declined. I don't know about you guys. Maybe it's a skill issue
All
for
right,
me, but
speak for yourself. All right.
like no, but I think
No,
like
I get it.
everybody
Yeah,
realizes
yeah,
as well. It's
No, no.
just gotten increasingly difficult, and I don't think it's because of like fair
definitely.
play. I don't think there's like the fact that we're losing fairly. It's more like there's just somebody with perfect information who's launching the token consistently and like
Yes.
very very manipulative about it, versus those who are like before you could ride the wave a bit with like clear manipulation or like some form of cabal activity. Like I remember when people were like cabal is good, now it's like not as good, but before it was like yeah, the cabal's in it, let's all get in it.
Back
um
in my day, the
Back in my
cabal was
day, man.
good.
Oh, I can't believe I did it back in my day. Um,
I mean, like my take here is like uh the like part of it is skill, the other part is just math. Like it's gonna be harder to do
yeah,
if you were in the trenches like in I mean I'm just gonna use 2023 to 24 as the example, but like that was a great time to be in the trenches,
Yeah.
so to speak. But like doing the same thing is just now harder mathematically. Like all else equal, it's just going to be harder because of alpha decay, right? Um, the capital has moved in a way where it's like now even more consolidated amongst like uh, smarter actors, and it just makes someone who is like full-time trenches, it makes that job more difficult. Now it doesn't mean it's impossible, and it doesn't mean there's still not going to be like very very lucrative opportunities doing that, but you have to stay like creative, because if you don't, all else equal, again, like your ability to generate returns in excess of the market, it has gone down, right? And so your alpha has decayed. um, but yeah, I think the other part of it is skill, which is kind of the creativity component. Like if you're able to kind of like stay on top of things, yeah, sure, like your opportunities haven't necessarily like gotten worse. You just have to be savvier. So yeah, I mean, I think like I've seen a few tweets about this. Vance actually tweeted something about this like today, so to speak. It was kind of like in a similar vein. It basically said like if you come to crypto, like just to make money, right? Like if you come in with this idea like, oh, the money's going to be easy, like you're in for a pretty brutal awakening, I think. Like it's definitely not easy money. In fact, it's probably harder money. No pun intended. It's probably harder money than like, uh, you know, other industries, other tech industries, right? Like you basically have to like come in every day with like some new kind of mentality or opinion on the market, or else like you're on the wrong side of the trade.
Yeah.
And so I think in that sense, like, yeah, like unless you're developing alongside the market and like refining that edge, yeah, it's gone. Or it will go. So yeah, I completely agree.
Just on the on the point about just once it's crowded and your edge is gone, I remember like at the peak of all the AI coins, and I'm like looking at my my wallet, I'm like, God, I have like 20 of these, and I can't keep track of them anymore. And I remember saying to myself, I was like, all right, I'm gonna spend 4 hours today, like making a notion, like outlining what each one does, what the differentiate. That was literally everything down 60% the next week.
Yeah,
So
like
that's always a good sign too. Like when you're overwhelmed, like in a specific, like especially going to like the AI coins and stuff that is fairly new. Like it's time and time again when it becomes like overwhelming, or you find yourself holding like an abnormal amount of coins, and you're just like, oh man, they're kind of going up, and like, oh, there's so much to track, I can't keep up anymore. Like that's a good sign to just take a step back and be like, okay, what is actually going on here, and is this at any way sustainable? Because most of the time the answer is no.
What's up, guys? Welcome back to dYdX Research. Today, I'm joined by Antonio from dYdX. Thanks for coming on, Antonio.
Hey, thanks so much for having me.
The app chain thesis has been validated now with dYdX and Hyperliquid and Unichain, as well as others. Where do you see that space head moving forward?
Yeah, and we were really early adopters of app chains. Generally, we've been early adopters of a lot of new types of technology, even within crypto. So we were pretty much the first major project to build on a layer 2. Before that was all the rage. And so I really think app chains are the pinnacle of where you see these really sophisticated, really mature types of products within Web3 going. And the reason for that is it just gives you a huge amount of customizability. It's harder to build, no doubt, because you have to own pretty much everything from a development perspective yourself, all the way down to consensus. But it gives you a lot of flexibility, and that's why we've been able to develop things that are able to support on the order of thousands of orders per second, all with no gas fees, and really low latency as well. Like you couldn't do that on a base. Like you can't really even do that on a Solana. Like you don't have all of Solana to yourself. So you're sort of forced at some point, if you want that amount of performance, or maybe in like a Uniswap's case, they want just some amount of customizability with what they're doing. And so eventually you have to roll your own thing. So I do see that as the end state for a lot of these applications, and it's exciting to be there now with dYdX.
Perfect. And would you say that the ultimate goal for crypto is being able to trade any asset you want at any time?
I'd say that's part of the goal. It's certainly being able to trade anything you want, but more generally than that, I'd say the goal of crypto and Web3 is to give you the power, you, the user, the power. And so you can trade whatever you want. You could be a market maker easily. You can, add any new type of asset. And all these things working together, I think, are really important. And additionally, you could have access to much more powerful types of financial products than likely you could elsewhere, and derivatives and leverage, those kind of things. And really everything that you see in Web3 is just giving you, the user, more options with what you want to do, and more power. And that, I think, is a big thing that we can play into with dYdX.
All right. Last up, we're going to do something that not a lot of people are brave enough to do. We're going to talk about crypto gaming for...
Hey, what did we just talk about? You look where nobody's looking. You don't want to go to the crowded areas.
Yeah. All right. I honestly don't even know how to start this. Josh, how are we going to start this? Maybe let's do Ronin. I guess, yeah, Ronin's probably the big one. Okay, I'm going to say what I remember from when I was doing a lot of gaming stuff, and then you can disagree with me and say this is irrelevant now.
Sounds good.
I remember Pixels was doing good in terms of users. I remember that Ronin had a ZK announcement. And that's really it. The last thing in my mind is that Ronin was trying to build out this like M&A thing. There were just like a lot of games were launching on Ronin for some reason, and then the explanation was that they already have a user base and people comfortable playing there. So typically, what ended up happening is that games would go to Ronin to get more relevant. Since then, I think we've had two chains that are somewhat gaming focused. Abstract is the big one. There's one more I can't remember. Maybe Barachain, but I don't think I've seen anything on it yet. But agree, disagree, completely wrong, somewhat wrong. What do we think?
So I do think that is basically right. The way that I frame gaming mentally is not how I think a lot of people have framed it historically. Um, there were two really good blog posts. I didn't write either of them, but I did write a blog post actually in like 2022 about how I think the future of gaming is like, and you can find it if you search on my mirror, but like it's one of like very few blog posts I've ever written about RuneScape and Robinhood like somehow like smashing together and like creating this like love child that probably looks like gaming finance something. It was probably a little bit too early to write something like that because I think at the time people were like, nah. But then there were two really good blog posts. One of them was written by Jez. This was like maybe 2 months ago, like right around the new year. The other one was written by a smaller account, Loris. He's like internet multiplier fun. And both were really good, and both basically talked about like crypto is a game. So everything we've done from like call it 2015 2016 to now, it's all been a game. And it's first person, and you are you got to pay to play, and there are all these kind of different rules and like characters and strategies, and you have to kind of learn over time which ones work and which ones don't, and they're like skills that you up level. And like if you think about it, like just like remove yourself from where you're sitting right now, and you think about it, you're like, oh, actually, like that actually makes some sense, right? And so I think I like to apply just like the game theory framework to crypto as a whole, and then just look at that on like a meta scale, and that's how I view gaming. It's like it's just the meta of crypto, just like in a new type of framework, but it's the same thing, right? It's a game that's being played. There are strategies that work. There are strategies that don't. You have to understand like kind of microstructure that exists within the game, and kind of like the best kind of strategies and ways to play. And then you also have to like learn, right? Like there's a degree of like learning that comes with that. So that's my kind of like, I'm not even going to call it like the bull case for gaming. It's just like the case for what gaming even should be or is. And then from there, I think you start to think about like, okay, what are the games that work under that kind of framework? And then also what are the distribution channels that exist during under that framework? So Ronin has obviously been one. Axie was a huge part of that. Pixels is a huge part of that. And then like Abstract and other chains that are building similar infrastructure for like basically game theory like packages to be built all around, like also probably cool things to look at. But that's kind of that's the way that I kind of frame gaming mentally. And then from there, it's a question of like kind of what we were discussing a little bit before, and we can kind of dive into it. But basically, how consumer behavior can be measured, and one way it can be measured is via this kind of like return on spend, or like I think the most broad metric to like think about mentally is like what is the ROI of a certain feedback loop, and like just start there. And I think if you like, that's where I start to pick apart like, okay, which games, like take 100 games, which ones have the best feedback loops? It's like it's very easy to measure that. You just like look at like input and output, like how much is spent to acquire the user, how much does the user spend, and that's what I look at for all these games. They're just like little bit, they're quite literally just like spend experiments. So yeah, that's the way I would frame it.
Yeah,
Alright,
no, I mean that was good. That was good. Go ahead, Bach.
I was going to ask two questions.
Yeah.
First of all, now I'm gonna come from a very practical point of view because I haven't spent as much time thinking about it as you have. Let's take two examples. Let's take crypto valleys, which I think you remember, and also DeFi kingdoms, because those are the two big ones that I can think of in terms of these feedback loops. Now, I agree with you in that it is exactly like DeFi in a sense, and I think a lot of people will agree with you on this because there is like a certain. It's when something is very, very financialized. I think the way that people interact with it almost always converges. Like, I think it's very, very apparent with DeFi kingdoms, just because it was very much like idle RPG, spend money, make money. With crypto values, I think it was way too much as well because people were like, I don't know if you guys remember this, but there were like threads going around about how you need to spend at least $150,000 to be able to get ahead in values, and then it like went down a week after. But I do agree with you on that, the incentive side, the way the loops work. The one thing that to me has always been kind of difficult is designing in-game economies is very difficult from a centralized point of view. The way that I feel like the good ones work is kind of a black market that gets adopted into becoming a real market. I think when you put in real money into it, it becomes a bit difficult. The second thing is, I feel like we never do like the very big economy games. We always try to do like very small ones. I think Pixels might be the only one that you guys are trying to make it a bit larger because there's a larger game base. The second one is everybody always brings it up, Project Eve. I'm doing the name wrong. You get what I mean.
Eve Online, yeah.
Eve Online. That's the second one that's everyone's like, this one's gonna be massive scale. But I feel like so far with games like Axie, great game, very like worked very. I think it did a fantastic job for what it was. But it's small scale and it's hard to like make that massively work, in my opinion. Let me know if you disagree.
No, I agree. I actually completely agree. And Tolks, I'd love your thoughts here too. My like quick, just like 2 cents on this is like, there are two types of games that we've seen in crypto. There's like hyper casual, quick, easy to learn, fun to play, whatever. And then there's like triple A. I'm just gonna say these are like games that are more expensive and harder to build correctly. Eve is an example of a game where, and it's a great game. I've talked to Hilmar, like it's really cool what they've done because they've basically taken like existing IP that people love, and there was already like a secondary market for assets in the game, and basically just said, hey, we're gonna like add crypto to this in a way that works. Very cool idea, works for them. I would call that an outlier. It is definitely not something that I think like every single crypto game can do, but they had really good IP. The difference is for them, they had like die-hard players. Like they had people who were so obsessed with it already that like learning the ins and outs of the economy and like how to trade things and like all the different resources, like that was something that took some time. There was a learning curve there. So I would not call that a casual game, and I don't think they would either. what we're working on at Pixels is like we're taking the other side of that. We like all those aspects, resources, skills, in-game economy. We just want to make it so much more casual that like pretty much it's the most accessible way to access that type of economy. It's just scaled way down into something that's like there's actually a name for this kind of game. It's called like a cozy game, and these games do exist outside of Web3. But yeah, like that's kind of the idea there. It's like those two camps, and like we are just skewed heavily towards the casual side.
So cozy game, Stardew Valley is, I feel like, the biggest example of that, right?
Yeah, exactly.
The thing I want to say about these like super the I forgot the word.
Hyper casual.
Games like not casual, non-casual, the ones that
Oh,
are
like
like really
AAA. Yeah.
yeah. I was thinking about this back in the day. I have this massive gaming report that I wrote, and the one thing that I thought of that made sense is if we're gonna go gaming and we want to make everything fully on chain, which I don't know if you have to make all gaming fully on chain, but let's say you want to, it wouldn't make sense to do that with a AAA game. I think um, you can do it with like Eve Online, but only because people are really, really into it. Like you need to nerd snipe people for that. And there's only a few nerd snipe games that are like I feel like popular are RuneScape, WoW, I guess Eve Online, but like there's also unpopular ones. Like I only play one video game. It's called Europa Universalis. I don't know if anybody knows it here, but I have like 8,000 hours in it, and that's the only game I play. And if it was fully on chain, like I would probably get nerd sniped by it and play it. But I think that's like a very different, like you can go for that and you can go for the cozy Stardew Valley, I'm just chilling and clicking a few buttons, but I don't think that you can go for, I don't know, like the big one has always been like FIFA Ultimate Team Online. I don't think that's gonna work.
It doesn't
Like, why
make
the
any
fuck
sense.
would you do that?
Yeah.
That doesn't make any sense.
Unless you're like selling like, and this is the thing, everyone, this was like last cycle, but everyone was talking about like, oh yeah, but then they could do it, they could sell like NFT jerseys or like NFT whatever. It's like, yeah, but like that doesn't actually add a fun element to the game at all. In fact, it probably detracts because
Yeah.
people don't want to have to deal with these microtransactions to do things. So I definitely agree there. The funny thing about these hyper casual games is like the main players of a lot of these games, at least conventionally, were like 40-year-old women who were like spending like they were like doing laundry at home and like playing like Candy Crush and like spending a crap ton of money on their phones. Um, like this is we've seen this behavior before with the casual stuff. The AAA stuff for sure, you get like these cults that form, and you can definitely get like basically groups of players that are like super involved. But the hyper casual games usually have like almost like a lower hurdle to kind of get player attention initially. The hard part is like how do you keep people spending?
Yeah.
So that's even with Pixels, like that's a tough aspect for us. It's like how do we kind of continue to retain spend even if it's happened once already?
That makes sense. Tolks, I'm going to pull you into this conversation. I know
Yeah.
you're not a big gaming guy, but this is how I'm going to do it. When was the last time that you played a crypto game, and what did you not like about it, and what did you like about it?
Oh man, the last time I played a crypto game,
Did you look
it
at
might
Crypto
have
Valley
been.
at all?
No. I didn't bridge the blast.
Mm.
Good idea, probably. Like that was a good call out back in the.
Oh yeah. What was it? It might have been Dungeon. No, was it Dungeon? It's on it was on ARB. Gosh, what is the name of it? It's been a while. That was probably a year and a half ago, a year ago. I'm blanking on the
Is it
name of it
Cambria?
now. I'll think of it.
It's not Cambria.
No,
All right,
not
that's
Cambria.
fine.
No.
Yeah.
But yeah, I mean, just to the overall conversation, like, and I'd like your thoughts on it, Josh. Like, I think the one of the hardest parts, like, in-game economies when they're isolated, like, they're difficult to get right on their own. And I think once you introduce like the overarching token, like, it's kind of out of your hands in a way because the speculators, like we saw with like Axie, like once that runs up to a certain price, like it just throws the entire in-game economy for like what you modeled out, what you could have thought, like everything is kind of just eliminated because the price of the overarching asset, like that reflects down into the game and other assets like the smooth love potion and Axies like themselves, like everything just kind of gets it just gets disorder and chaos, and it's all because of kind of the overarching price of the token. And once that's launched, like it's kind of out of your hands. So that's like, and I wonder how you think about that, Josh. Like with pixels, I think that is kind of the hardest part to control because you don't really have any control over it whatsoever.
Yeah. So we at Pixels we call this game balance. We have people working on it like full time because
Right.
it is like a really tough thing to solve for. It's actually not something you can really solve. It's something that like you basically have to like do monthly sprints on like, hey, how's game balance look today? We have like basically mathematics that measure game balance, and then like, you know, I hate to use the buzzword AI, but like we have basically intelligent type of systems that like look at game balance, measure it, and say, cool, like what parameters do we need to change now so that things kind of stay normal. We had a really interesting team on game economy side of things. Like there's a really cool public good that a separate external team built that we're really close with called Pixels Tips. So you can check it out. It's pixels.tips. And it's like a really cool way to track resources, in-game market, crafting, energy, lands, guilds, all of that in the game. Kind of reminds me when I first saw it. This was like 2 years ago when I first found this. I was like, this is literally basically like these grand exchange wikis from RuneScape, just like, you know, compiled into this one type of you know, kind of like market aggregator. And like if you click on some of these like rare type resources like Adamantium or something, um, you can like see the price of this resource and the quantity in the game. And so I've just been like you can talk to Luke and like some of the rest of the team. Like I'm definitely the most obsessed with this thing like out of anyone on the team. I'm like, this is so sick. Like if this existed in RuneScape, like, oh my God, like when people were playing, that'd be so dope. Um, I just think it's pretty cool. And it's something that I want to leverage, like where my goal with Pixels is like, I want to open this up because of course we're going to have people who are coming in specifically to play the game. But like, there's also another cohort of people that we've touched on, which are like the traders, the trench warriors, whatever, right? Who like their main mechanic is trading. We still want to give them a way to participate. And like to me, this seems like maybe some type of kind of playground. But yeah, like stuff like this, I think is just like so interesting because these are the things where I'm like, okay, we're opening up in-game economy. We're starting to think about like other ways for people to play, whether they be traders or like gamers. And yeah, I don't know. I just think stuff like this is super cool and interesting. And like, you know, eventually, like, you know, it becomes kind of like you can play in the same way that we were talking about like the meta strategies of crypto. There'll be like meta strategies of each game where it's like the more strategies that exist, the more potential players you can have, right? If your game offers a way for traders to have fun and for like true grinder gamers to have fun, cool. You've like, you know, your TAM is larger than if you were just like a trading venue, right? Because you just have more potential users. So, yeah, and there's some cool stuff that I can't talk about that we've talked with other teams on, where like there's some cool stuff around like economy and resources and assets there that we could, you know, think about doing there too. So yeah, but I do agree with your overall point that like getting game balance correct and like to a point where it just doesn't fly out of control might be the hardest thing. And so like we have a team working on that. We have a data science team that's like basically measuring you know, user data and retention and things like that. We have like the actual like game design team. We have like so like we have all these basically like subgroups within Pixels that work on different aspects of the game to make sure that like none of these things go out of whack. Because you're right, if they do, it kind of like it can make your life just so difficult and like the odds just stack against you for sure.
Yeah, no, I mean that makes a lot of sense, and I mean just going back to the earlier conversation about capturing the user, like you can see, I think Xe tried to horizontally expand with like their own decks, and I mean you can see how these things like once you do have that user flow, like you can introduce other aspects, like your own decks or what else is in their wallet, like you have not control of it, but you can start. There's something that can be built out there. It goes back to kind of the wallet conversation too. Like you can see the vision of what, the overarching and what it can entirely encompass.
Yeah, completely agree. Yeah, it's just like a different type of order flow, right? So
Right,
yeah,
right.
yeah.
All right. Josh, thanks for coming on. Do you have anything you want to tell what's your Twitter handle? And also, do you have anything that you want to shill specifically regarding pixels for people to do?
No tickers. No tickers.
Oh, thank
I'm
you.
not gonna shill anything. I think if people are interested, they should pay attention. And we have announcements coming out, so pay attention. My Twitter is at Josh Litchman. My last name is Litchman. So at Josh Litchman. I post hot takes. I post just anything that comes to my mind, but I am really focused on like user behavior and the economics that kind of go alongside that. So yeah.
Very good.
Awesome. Yeah, this was
fantastic.
blessed. Thanks, Josh.
Thanks, Josh.
Thanks, lads. See you later.